largest stock exchange.
Hello and welcome. You're watching Countdown. Well, you've got the Yes Bank's numbers for Q4 flashing there on your screen. Definitely, there is some improvement that has been seen with regard to asset quality. The net NPA has improved sequentially. The gross NPAs have come in at about 1.28% versus 1.72. Net NPAs are at 0.64 versus 0.93. And I guess the stock reaction that you're seeing on your screen is on back of that improvement in asset quality that one has seen. Even on the bottom line front, the standalone net profit has come in at about 1180 crore. Remember, the Bloomberg poll was throwing a profit figure of 1085. So even on the bottom line front, there has been a bit of beat when it comes to the profitability. Asset quality has been good. We'll keep getting you more numbers. I think the NIs are expected to be somewhere about 2034, which is a growth of almost 2000, which should be somewhere about 2034 is what the Bloomberg poll was throwing about. Let me get our guest on the show, Hemendra Hazari, who's an independent banking analyst, is joining us right now on the show. Hi, Hemendra. Good afternoon. Thanks a lot for joining us. So far, we've got the asset quality numbers. There is an improvement which has been seen on sequential basis. The profitability is above what the street was estimating. What have you made of the numbers so far?
In the case of Yes Bank, because of this history of 2 consecutive years of divergence, I think what is very important to see what is the state of the asset quality. Because here the net profit figure is far less relevant in such cases. And now we have to see what type of slippages they have reported as compared to the earlier quarter. Because what we've seen from Yes Bank is, after the reduction, you have sale of ARCs and something gets upgraded. But to me, what is extremely critical to watch for is the gross slippages to NPAs. And that is, one figure that I think should come out shortly, and that is what is to be seen. Because unfortunately, the history of this bank suggests that its numbers really have to be taken with many pinches of salt.
Hemendra, I'm also looking at the provisions. They've come in at 400 crore. If I look at the provisions of the December quarter, it's actually declined in the December quarter provisions for at about 421 crore. What was the provision number that you were working with?
According to me, this provision number should have been more than the third quarter, because I had done a study which I published on its exposure to Reliance Naval. That single exposure of the bank was about 485 crores. Now, it has to be seen whether Yes Bank has reported this account as NPA, because I understand, and from the disclosure of Reliance Naval Engineering, that it has become an NPA account with most of the banks in the consortium. So it has to be seen. And this is a question that has to be asked of Yes Bank. What have they done with its 485 crore exposure towards Reliance Naval? If it is a performing asset, how come it is a performing asset when 20 banks in the consortium have classified it as NPA? Because as a single account, it is quite large. So all these things have to be really factored in. When your bank like Yes has a history of divergence, one really cannot take any of these accounts at face value.
Hemendra, stay on with us. We've got our banking analyst, in-house banking analyst, Shraddha Babla, who joins us now. Shraddha, I'm just looking at the press release. It says healthy growth in NI, which has led to good sort of profitability this time around. What's the growth that we've seen in terms of net interest income?
Actually, Navneet, I just want to point out a couple of things from the notes they have given out. One, they've said that they have not availed of that RPI option to spread MTM losses on bonds. Secondly, they also have given some updates with respect to the divergence that the RBI had pointed out for the risk-based supervision for FY17. I'm just trying to read out and understand why they have shared this, because they'd already shared this number at the end of the second quarter in October when they reported second quarter numbers. So the gross NPAs, the divergence in the gross NPA as of 31st March was 6,355 crores. So what they have said is that the net current current impact of the aforementioned retrospective slippages due to divergence that was noted by the RBI on October 2017 has been duly reflected in the results for the quarter. Now, out of the divergence, the current position as of 31st March is what they have shared. There have been net repayments of about 2,400 crores. They have sold about 803 crores to asset reconstruction companies. So, as of 31st March, what is now outstanding is about 3,100 crores. I think this is a number which is higher than what they had previously shared with respect to the net position of the outstanding GNPAs. I think in October, after the earnings, they had said that 6,355 crores of gross NPA divergence was down to about 1,200 crores. That's what they had said then. And now, as of 31st March, what they're saying is that the outstanding is 3,100 crores. Hemendra, just want you to come in on this point. I mean, what do you make of this additional divergence disclosure, especially after this is something that they've already disclosed at the end of the second quarter numbers in October?
See, I am not clear with this additional gross NPA divergence. Are they saying this is in addition to the gross NPA divergence that they had earlier disclosed? Or is it that out of that divergence they had factored some recovery or some upgrades, and out of that has not happened? So I'm not really sure what this additional information means. Now, if it is not an addition to the gross NPA divergence which they had declared earlier, then to me all this is irrelevant, because you have to take it as on a particular date what was the RBI divergence. Subsequent to that date, if the bank claims that it has upgrades, it has sold to ARCs, some of it they have recovered, to me is totally irrelevant, because as on that date, they have not conformed to that amount of RBI divergence, and that reflects extremely poorly on the CEO, in this case, Mr. Rana Kapoor, and the CFO, who has, I think, recently stepped on, Mr. Rajat Monga. It reflects extremely poorly on them when you have such huge RBI divergence for 2 consecutive years. And I'm really surprised if RBI now extends his, Mr. Rana Kapoor's tenure and gives him an extension when you have such a history.
Okay, I just want to stay on Hemendra. Also want to point out that some of the other parameters which we have more details about, the net interest margin has come in at 3.4% for the quarter, and as compared to 3.5 in the December ended quarter. In fact, this also is a surprise, because margins in the third quarter had taken a hit, and they were expected to normalize in this quarter and see an improvement, but that hasn't happened even when it comes to the margins. As the advances growth number of about 54% is extremely strong. They've said that retail banking has nearly doubled doubled to 12.2%. This is as a percentage of the overall portfolio. So strong growth coming in from the retail banking bit. CASA ratio is at about 36%, strong 41% growth seen over there. Okay, some details that they have given with respect to some of the other parameters. Credit costs for the quarter have come in at 13 basis points as compared to a number of 18 basis points in the previous quarter. So overall, the credit cost for FY18 now stands at 76 basis points. They had guided for about 75. So more important to watch what they're going to say for FY19. The gross slippage number for the quarter has come in at 380 crores. They've also said that the net security receipts has come down just about by 1% to about 1,880 crores, and the standard restructured exposure stands at about 337 crores. That's the details that we have. Yeah.
Details, Shraddha. Let's nail it down to the 2 or 3 key factors. I think the asset quality numbers that have come out, and the fact that their bottom line numbers look a lot better than what we were working with, seems to be working in their favor. Absolutely, Neeraj. So the big improvement in the bottom line asset quality number, we were not expecting any negative asset quality surprise. That hasn't happened. I think there's a little lack of clarity with respect to why they had to report this gross NPA divergence again. I believe that the gross NPA divergence number as of FY17 remains the same at 6,300 odd crores that they've mentioned
mentioned, as of December, if I remember correctly, as of October, sorry, that number they had said had come down to 1200 crores, and now they're reporting a number of about 2000 crores or so. So I believe some of that would have slipped into an NPA. That's the only thing that we want clarity on. But otherwise, operationally and in terms of the headline asset quality numbers, also the numbers, yes, do look fine. Okay.
Thanks, Shraddha, for that. I'm sure we'll give you some time to actually look at some of these other numbers as well. Hemendra, one final thought from you. I know you by and large are skeptical about these, but we've seen now 3 or 4 numbers come out. HDFC, IndusInd Bank, yes, is arguably the third large one. We'll have Axis coming out today as well. Are you turning sanguine on any of the private sector banks, or you still remain skeptical?
Anything but sanguine. And let me tell you, I would like to disagree with both of you in saying that the numbers are better. In fact, that single disclosure that you just mentioned on air, that their gross slippages for the fourth quarter are some 370 crores, that very clearly tells me that the Reliance Naval Engineering exposure has not been classified as NPA, while many banks are expected, because that single exposure on Axis Bank is going to be around 385 crores, which is in the public domain. So that itself should be a greatly worrying development. If what you have told me that the gross slippage number at 370 crores is accurate, that means that this particular large account has not been classified as NPA by Yes Bank, when we expect 20 banks in the Reliance Naval Consortium to have classified as NPA. And therefore, the management must be grilled by the media and by the analysts on why this particular account has not been identified. And this tells you that there may be so many other accounts which we are not aware that this bank may be classifying as standard when other banks are classifying it as NPA.
That's a pertinent point, and I'm sure people will be talking to the management when they address the media. I think 2:45 p.m. is when Yes Bank talks to the media, so I'm sure some questions around this will be answered as well. Hemendra, thanks for putting that into perspective. Really appreciate your time joining us today. That's Yes Bank. Well, the market liking the reported numbers. There are a couple of clarifications, as one that Shraddha pointed out and Hemendra pointed out as well, that we need from the management. I think we'll get them when we get them about 2:45, 35 minutes from now, when the management starts speaking to media. Now, forget the market. Yes Bank as a stock seems to be doing okay even now, 3.5% higher. The reported quarter-on-quarter asset quality numbers probably driving the stock right now. Let's see for how long does it last. 336 and counting on Yes Bank. We have Mahantesh Sabarad in the studio as well. But before we get to him, I think a management that is waiting by for the earnings, and that is Supreme Industries, reported about a 20% jump in the March quarter profits. The board has also announced a final dividend, 9 rupees per share. It is that notwithstanding, let's get in the management to talk about the numbers and the outlook ahead. Do we have Supreme Industries with us? Okay, Mr. Taparia is with us. Mr. Taparia, good having you. Thank you so much for joining in. Are you seeing the landscape change for companies such as yours? How was Q4 been? And how do you expect FY19 as a year to shape up? Everybody talks about how the unorganized to the organized move, especially in companies and industries such as yours, will work out beautifully in FY19. What are your thoughts about Q4 and how FY19 would shape up, sir?
Quarter 4 is a harbinger. It has made us quite optimistic of what we have planned. We are expecting a better year in the year 18-19. The major structural economic reform undertaken last year, the Demonetization, Real Estate Regulation Act, and implementation of goods and service tax, all are positive for the growth of our business. So we are quite optimistic that this year we may grow between 12% to 15% by volume. And
okay, sir, you've improved the margins as well, which is something I want to talk about. But since you talked about the volume growth numbers, let me just quiz you on that first. 12-15% on volumes with the pricing power that a leader like you would have. One to presume that the top line numbers for FY19, I'm straight away cutting to the chase. Would the top line growth for FY19 be better than what we've seen in the past? I think the last 2 or 3 years, you've had about a 12 to 15% top line growth.
This year we expect our top line growth between 5,400 to 5,600 crore, in spite of divesting our one unit which is operating at Pushkar in Rajasthan. This year we are divesting it from 1st July, which was giving a turnover of 100 crore rupees. Even then, we expect our value growth will go up between 600 to 800 crore this year.
So you're suggesting you're expecting 5,000 crore in terms of revenues for FY19?
Yes, 5,400 to 5,600 crore.
Okay, if that's the case, that's going to be a muted top line growth that one will see over FY18.
Top line value growth, last year value was 4,900 crore overall,
right?
But product growth was, value turnover was 4,820 crore.
Okay, before we let you go, sir, just a question on the cost pressures, because the polymer prices have been firming up. Do you see the margins coming under pressure in FY19 if the prices continue to firm up?
The polymer price, when they go up, we are able to transfer the increased cost of polymer to our product.
Okay, Mr. Taparia, the street is working with an assumption that the 2 new greenfield projects that you embarked upon would get commissioned in FY19. Are these reasonable timelines to expect?
Yes, our one project at Gilot will go into production in second quarter. Our third project, our other greenfield project at Jarchala will go into third quarter. Our other expansion also at Malanpur, at Hosur, at Kharagpur and Khopoli. All will go in production one after another starting from second quarter.
Okay. So in light of that, are we to presume that when these units reach peak capacity utilization, if they do, which could not be in FY19 but maybe FY20, both the volume growth and the top line growth would look a much better picture than compared to what you will do in FY19, sir?
You are very correct. We expect the way what we are thinking.
Okay.
So the street would like to know whether there could be any impact on your products because of the plastic ban which has been imposed in the state of Maharashtra.
We don't operate in any of the product segment.
Okay, so it's not going to impact you at all.
We don't make any of those products.
Okay.
No impact on us.
Okay. Just a last question from my side. You said the top line growth will be about 5,000 crore for FY19. For FY18, you did something like 4,966 crore. What's the sort of guidance that you can give us with regard to EBITDA margins? Are they going to remain stable around the current levels then?
I say our turnover will be between 5,400 to 5,600 crore.
Okay.
And our operating profit margin will be between 15.5% to 16%. Last year, our operating margin was 15.76%.
Okay, so that's almost a growth of 400 to 500 crore that you're expecting on your top line. We'll let you go on that note, sir. Thanks a lot for joining us and all the best for FY19. Well, that was the management of Supreme Industries giving a guidance what can one expect. They've almost done 5,000 crore in terms of top line for FY18. He expects the top line to be between that range of 5,400 to almost 5,600. The EBITDA margin guidance for FY19 he's given, it could be between 15 to 16%. Remember, there are some cost pressures which have come due to increase in crude oil prices because the polymer prices also go up, but they've clearly stated that they will look to increase the prices and pass on that cost pressures. Yeah. Supreme Industries is trading with gains of just about 1.5%. Yeah,
steady as she goes, Navneet, and this, the juggernaut keeps on rolling. They keep on doing this steady state, 12-15% kind of a growth. And I've been hearing the same man for the last 7-8 years. Understands the pulse of his business like probably nobody else. Let's get your market voice. Mahantesh Sabarad, Head of Retail Research at SBICAP Securities, joins us on the show. Mahantesh, by any chance, before we get to the other conversations, any thoughts on Supreme Industries? Do you guys track it at SBICAP?
Yes, so we don't track it regularly, but we had it on our investment radar some time back, and it's given us good returns. The expectations for such a company is really very high. Although we always find that they under-deliver in terms of expectation, but no complaints. The stock keeps rising. There are times when crude prices go up, and therefore this is the favorite stock to short at that point in time. So anyway, you have to pick it at the right time, essentially.
I guess so. Okay, what's the market thesis, Mahantesh, before we get to specific ideas and what is it that you like and you don't like? This uptick that we've seen, does it make you wary of putting in large sums of money to work currently?
On the contrary, we are quite happy that the events that we saw in the March quarter are behind us. We had actually good news by the time March ended. We had bond yields easing, for example, number one. Although crude prices is going up, it's not materially going to rise any further. That means the consensus seems to be that crude will settle at the current levels. That's number two. Number three, we are finding for credit growth actually recover in the economy. When I say recover, it was in low single digits not too long ago, and now we are already off to the double-digit credit growth number. And then we have had last three IIP numbers quite strong. I would say we had what, close to 8% IIP numbers reported for last 3 odd months. Industrial capex has revived, and you can see we had a large order book build up for infrastructure companies. Most of them reported order book build up of 40 to 50%. I think there's a lot to look forward to, and therefore we think the markets will recover. So large monies can be put in right now.
Interesting. Okay, so let's talk about pockets. Unless Naveed, you want to ask something else? Go ahead. Let's talk about the pockets where people can put in money to work. You are bullish on Blue Star. Now, is this bullishness on this whole space of white goods in this variety, or are you choosing Blue Star for specific company-specific reasons?
Not choosing Blue Star specifically, but it's the air conditioning space which is generally doing really well. If you look at the air conditioning space, which is the room air conditioning space, actually Blue Star is not the market leader. Voltas is the market leader, but Blue Star is equally large. If Voltas is about 15-17% market share, Blue Star is about 11-12% market share. But what we like about Blue Star is that from a valuation perspective, unlike Voltas, it is fairly cheaper. On a forward earnings, probably that 35 odd multiple, somewhere around that. And there is a lot to look forward to in terms of growth, particularly on their industrial air conditioning segment to chillers, for example. So there's a lot of growth that is happening. Blue Star should be therefore a pick.
Have they been able to increase the market share post GST?
It's very difficult to say, but the room air conditioning market is very, very competitive.
Okay.
I don't think Blue Star would have made any material gains in terms of market share, whatever sense we are able to gather from ground level reports. But the moot point is that at least they are not getting into huge discounting pressures. Normally, air conditioning markets get into a huge amount of discounting pressure. Blue Star typically stays away from it, and therefore there is a prospect of it bettering its margins ahead.
So, are you betting on it because one potential gap in valuations compared to some of the others? I'm just trying to think that within this cooling space, if you're not betting on the market leader, you're not betting on the alternates which are also doing well, air coolers for example, but you're betting on a Blue Star as being one of the key things. There has to be that one compelling reason which leads you to narrow down on this one compared to the others.
So when you have industrial capex recovering, for example, so you need to have a company of this kind who can also capture that leg that you are having. So the moment you have just now I talked of credit growth happening. We have had strong IIP numbers, which is a harbinger of good times ahead for a company like Blue Star. So their EMP projects, electromechanical projects, are likely to do well. And let's look at it. I have in the past been talking about the metro projects that are happening across the country. There's a huge amount of capex required for making a metro happen, unlike a normal railway, MRTS kind of system. And Blue Star is apt for such kind of projects. So just an example of what I'm looking at. It's not that metro is happening only in Mumbai, right?
Of course.
It's in Kochi, it's in Jaipur, it's in you name large towns, and every town wants to have its own metro. I think that's something to look forward to.
Certainly is. Okay. The next stock that I thought of asking you was SH Kelkar. Now, I think about a year ago, or maybe a year and a half ago, it caught the fancy of a lot of people, a lot of investors. Somehow hasn't quite done well on at least the bourses. And you have to admit that their financial performance compared to a lot of other companies, quote unquote chemical, specialty chemical space, has been found wanting. Why are you choosing SH Kelkar?
No, so the hunger that the management has, it has got so much of acquisitions under its belt now. They acquired the Italian company, Creative Fragrances and Flavors and Fragrances. So I think that makes the company's future quite bright. So irrespective of the financial performance not being so great, we think there is reason for it to improve it as the acquisitions mature. So over a period of time, this is a great management. Actually, there is no second thoughts to the management quality here. Probably they get caught into the way the business pressures are in terms of, say, raw material pressures to otherwise. But if you are going to have a steady 8 to 9% growth, and fragrances and flavors is something which is a rapidly growing market, especially in India. More the urbanization, more is the segment likely to grow, then there can be no other company than, let's say, an SH Kelkar.
What sort of target price are you looking at here?
So typically when we pick these stocks, we generally rate is at an performance, but then our minimum standards that we set for ourselves is we look for a 20% upside at least. The 20% upside has to be backed by a commensurate CAGR growth in its earnings ahead, if not in the next 2 years, at least in the next 5 years.
Okay. You've also chosen something like Hindustan Zinc, and we've seen the metal stocks doing really well in the last 1 year or so, but Hindustan Zinc in particular continues to have that overhang of government stake sale in that. And I was just reading one of the reports where I think Mr. Anil Agarwal has proposed to hive off the silver unit, which is highly profitable for the company.
Yes, of course, zinc manufacturing involves...
It's a byproduct, right?
Yes, silver is a byproduct, and you would have noticed that many times the entire profits being made by Hindustan Zinc is actually coming from silver and not necessarily from zinc alone. But Hindustan Zinc is one of the lowest cost producers of zinc in the world. They have their own captive mines, they have their own captive power. These are two vital ingredients that keeps your cost levels down compared to other producers in the world, and therefore you are able to capture a larger margin on the zinc prices. Whenever zinc prices go up, your ability to capture the widest margin is natural. So Hindustan Zinc is therefore, and in India it's like virtually a monopoly, I would say, virtual monopoly, not exactly a monopoly, but my point here is that it's a huge cash generating business, unlike some of the other metal companies who do generate cash when the upcycle begins, but they have to there is a huge capex that they have to keep doing to grow. Hindustan Zinc doesn't really have to commit itself to large capex, although it has a capex program of $1.6 billion. By itself the number is large, but compared to what kind of generation that they're doing in terms of cash flows, it's quite meager. So I think therefore this company is going to be good. But this bit of news about silver being hived off into a separate company perhaps is something that we don't like, because that would mean the valuable part of the business is going away. How much of the participation will the investors have, the current shareholders have in that business remains to be seen.
20% upside for this one too?
Something like that. So like I said, our standards are something like that. It's a one and a half year kind of time.
Okay, next pick is on something, a space rather, which has been doing pretty well. I think you've chosen Tata Elxsi.
Yes.
The numbers came out a while back, I guess. I think there was a slight bit of dip when it came to the margins of the company this time around. What did you make of the numbers?
It's no worries, because, you know, again here, this is a unique business. Traditionally, Tata Elxsi is known as a VFX maker, but then the applications of that VFX is not just movies alone. It's a host of things that is happening with a lot of mobile and internet of things really happening. IoT. This is a company that will be the interface between the back end driver of an IoT to the front end. Great business to be in. I think margins, these are like temporary blips here or there. Great business, I would say. Tata's and the management, no questions to be asked.
Yeah. Again, I'll just ask one standard question. I mean, is this the favored idea within this broad IT bucket, or it's one of the 2 or 3 names that you guys like within that IT space?
So generally within the IT space, we prefer the large cap names. Okay, so we have always been saying that it is an Infosys or perhaps a TCS to an HCL Tech or a Wipro. Wipro gave bad set of results and therefore quite disappointed. But it's always been large cap IT names. Though the mid cap IT names, we are very specific. We generally don't like mid cap IT space because most of the profits that they generate are through the swings in currencies. None of, and or sometimes it is swings because they are able to mine one customer for 2 years, that's it.
To be fair, the last 9 months have shown that they have the ability to be able to create verticals and niches where the large cap IT space has kind of failed.
Some create IPs and therefore they grow well. Tata Elxsi has been having its own IPs, for example, and they grow well. Persistent has its IPs, so one can look at such businesses, but in Persistent, in terms of its valuation, is far too high. The way some of these mid-cap IT names have rallied in the past 3-4 months is beyond reason.
Okay, so you're preferring Tata Elxsi amongst all of the others?
Yes.
Okay.
Far more steadier.
We had a technical analyst in the morning during our F&O show. So I think Ashish Chaturmota was there. He had given a call on this when the market cap was 5,000. Currently it's 7,500. And I'm surprised our technical guy is also giving market cap target of something like 10,000 crore on Tata Elxsi. How much time do you think it'll take to reach that sort of market cap?
I don't want to guess on the time, but this for such companies where the business is there. It's for their taking. It's just that how fast or how swiftly they're able to move. I don't want to take any guesses on when it will reach, but it is sufficing. In retail research, it is very simple to say that stock does 15-20%, gives you 15-20% return. It's sort of enough. Not many are. We are not chasers of multi-bagger stocks all the time. We just want every year investments to happen to give you above market kind of returns.
Yeah, well, okay. Great. Mahantesh, so good having you. Thank you so much. Thanks so much for waiting patiently while all those results were on as well. But really nice of you to take the time out.
Thanks for having me.
No, it was a pleasure having you. Well, that's Mahantesh Sabarad of SBICAP Securities talking about what they believe could deliver anywhere between 15 to 20% returns over a 12-month period. 3 or 4 names shared. Remember, if you missed this story and just tuned in and want to know what those stocks are, log on to our website, www.bloombergquint.com, and you will get a piece of this interaction in a bit from now. So that's something that you can log on to the site for more details. SBICAP's reasoning and, of course, the names of the ideas that they believe can generate these returns. The markets marginally in the green, but just before we get full tilt towards the markets, hear out some more voices. Nikhil Vora of 6th Sense Ventures believes that there's a lot of room for growth for liquor companies. Speaking to our son, our special series Alpha Mughals, Vora believes that he does not see large behemoths leading the way in innovation. Listen in.
The attractiveness was about believing that you can't buy the entire Indian liquor space at a couple of $100 million or something, which used to be the value of United Spirits at that point. Completely ridiculous, because it's an opportunity which will grow, it's a market which will grow, but you had a dominant player who was plagued with its own management issues and so on. But the space was not going anywhere, right? So the space would remain and grow. So we betted on that, and that's really played just disproportionately very well. I think it's still extremely early days in that life cycle. You look globally, liquor businesses are at a multiplier to cigarette businesses. In India, it's reverse. In India, cigarette businesses are at a multiplier to liquor businesses. So, if one wants to really buy into social vices in whatever form it is, liquor is a better vice than cigarettes for investors, for sure. So I think liquor still has a long way to go. Obviously, there are operating hurdles in this country, which always will remain for at least the foreseeable future. But it also creates opportunities for new players who are able to navigate themselves through this journey. So I think you will have opportunities in various spaces in liquor. So we've obviously seen what happens in spirits, in beer, in maybe at some stage you'll see the same happen in other categories also. could be wines, could be something else very soon. So I think you will have a lot of opportunities in that category. The good part is that in this category you will almost always get symbolized by a 40-50% dominant market share leader. And the good part is that because these businesses will not require too much of capital, it's almost always going to become a seller's choice market. So I think it will remain valuable. The challenge is about identifying categories which are going to be relevant in the next 5-10 years, and whether the larger entities are really present in those categories. Are they doing really great category innovations within that fold? I don't really see significant innovation happen from the larger companies for sure. And the irony is that disruption can happen from challengers. It doesn't happen from leaders. Yeah. So Unilever can't disrupt their own businesses, and nor can an ITC do it. And frankly, closer home, nor can an Infosys do it. Right. So you'll always have disruptors who are challengers, who will by default be able to take a relevant market share, create a relevant market, because the noise value in that category will be a lot larger than what a Unilever can do in that category. Yeah. So I think the value also resides there, because if you come in early into those categories, and like I said, they require capital only twice. So if you come in early into those categories, I think you potentially have an ability to buy into a dozen potential Unilevers in the making. Not of that size and magnitude, but of a relevant size and scale.
Well, that was Nikhil Vora, who's tracked the consumption space pretty closely for a really long time. And talking about the consumption space, the Nifty FMCG index is doing pretty well. Just want to mark a few stocks from that space. Remember, we spoke about Nestle in details with Sanjay Manyal of ICICI yesterday, and the stock's actually back above the mark of 9,000 in today's trading session. It's trading with gains of almost 355 points as we speak. Nestle, remember, the annual report had come out a few weeks back, where most of the brokerage houses, especially the MNC brokerage houses like CLSA and Credit Suisse, had upgraded the counter and rather increased the target price, betting on the volume growth they posted for calendar year 2017 of double-digit volume growth in the range of 10 to 10.5%. All right, let's shift focus back to markets. I think Jubilant Foodworks has also gone up in trade, considering we were talking about the consumption space. That's one of the top gainers in the Nifty FMCG index, trading with gains of 2.5%. Expect some volatility to come by. Today is the expiry day. 10,572 is the level where Nifty trades. Bank Nifty is also trading in the positive territory now with gains of 40 points. Good time to get in our technical experts on board. Mohit Gaba, trader and technical analyst, is joining us, and also joining us in a while will be Mr. G. Chokkalingam, founder and managing director at Equinomics. Hi Mohit, good afternoon. Thanks a lot for joining us today, and I think it's your first time on Countdown.
Yes, it is.
All right, welcome to Countdown on Bloomberg Quint. What's the view on the markets? Nifty, particularly talking about the April series, we've seen a good bounce back from those levels of 9,900, 10,000. We've seen gains of 400 to 450. Do you think the rally will continue in the May series?
So we're placed pretty precariously right now. As long as we trade above levels of 10,500, 10,550, these are pretty strong support areas in the very short term. The bias has to be on the upside, at least initially, towards levels of 10,700 to 10,800 zones. Now, we have to wait and see if next series we hold on to these 10,500, 550 levels. If we do break lower, then I can see levels of perhaps 10,200 being revisited. So it's basically we've moved down pretty sharply. This is kind of right now a rebound upward move we've seen in the last series, or rather the present series, for about 600 points, and we have to wait and see if this continues higher or holds on or even breaks lower. So we're placed pretty precariously right now, and we have to wait and watch how we open the new series tomorrow in trade, and how we end the week tomorrow as well.
So are you sitting on the sidelines when it comes to index trading?
Well, intraday, there are many opportunities in the index, in the Nifty, for maybe 20-25 points. If it's a big volatile day, you might get even more. So intraday, there are always opportunities, at least most days there are. But if you're looking from a positional point of view, I think it's best just sitting and waiting to see how we open tomorrow and also how we end the week tomorrow. So if tomorrow at the end of session, we kind of break conclusively below levels of 10,500, then you can expect further downside. Whereas if you're still going to hold on to this range in the new series, then the bias still has to be maintained on the upside.
Okay, just a quick follow-up. This series has been marked by relative underperformance of the Nifty Bank. What do you see that index doing in the near term?
Well, that's been a mass underperformer like you mentioned. However, what I've seen with the Bank Nifty is that it is a lead indicator, but at times it also can play catch up pretty sharply. So if we are to break lower, then the Bank Nifty could lead on the downside. But if we are going to hold on the next series above levels of 10,500, then you can see the Bank Nifty propel the Nifty higher towards 10,800. That could be the single mover, and the Nifty IT could just hold on there. You could see perhaps sideways consolidation. So nothing can be ruled out right now, though it is a mass underperformer right now. It could catch up very easily in the next series.
Well, financials definitely play an important role in Nifty's move, considering they have almost 35 to 40% weighted. But talking about individual stocks, Mohit, what are you recommending today?
Well, a bunch of stocks that are doing really well in trade. The first buy calls, Jubilant Food. It's trading at all-time highs in a pretty strong uptrend. So one can continue to buy this with a stop around levels of 2,500. You could even have a deeper stop around 2,480 because the trend is pretty strong. And levels of 2,600, 2,650 are pretty easily achievable on this. So it's a buy. The second buy call is Bajaj Auto. That also is looking good on the charts. It's kind of trading close to a very strong support area of 2,800, 2,850. So this is a buy with a stop around levels of 2,865. And you can see levels of 2,990 to 3,000 zones in the coming few days. As a third buy call is Hindustan Unilever. Again, a very strong price chart, trading at all-time highs. This can continue to head higher towards 1,550 in the coming few weeks. So this also is a buy with a stop around levels of 1,460.
Oh, that's interesting. HUL at new highs. Autos, most companies have taken price hikes as well. At least the ones that can have taken price hikes too. So interesting moves out there. Mr. G. Chokkalingam, founder and managing director at Equinomics Research and Advisory, joining us on the show. Mr. Chokkalingam, good having you. Not all of them, but companies like Ashok Leyland popping up on the screen every second day, hitting new highs. The others are not far behind as well. We have Maruti numbers coming out later this week. What are your thoughts on how should one approach investing within the auto space currently?
Yeah, certainly. Definitely, one can look at Maruti. As you mentioned, Ashok Leyland has done phenomenally well in the short term. It has risen substantially, whether you take 6 months or 1 year. Whereas, the commercial vehicle segment, unlike passenger vehicle, is known for highly cyclical pattern every second and third year. So therefore, I would not chase Ashok Leyland. Rather, I would suggest buying Maruti. In the component base, one can look at Sabarad Maruti, which is down by about 35% from the peak. And it is setting up a plant close to Suzuki plant in Gujarat. So once Suzuki commissions its own plant, the Sabarad Maruti would get a lot more order. And the stock is also down 35% from the peak and trades at around 11-12 P on 1 year forward earning. So that stock looks good to me. It can create a substantial wealth in the next 2-3 years. So these are the two stocks I would advise within auto space.
Mr. Chokkalingam, the last couple of days, in a manner of speaking, belong to the insurance companies as well. If yesterday and day before yesterday, ICICI took it upon itself to try and narrow the valuation gap with HDFC Life. Today, HDFC Life, I guess, decided that let me restore normalcy. And ICICI Pru is corrected. HDFC Life is up about 4 or 5% or 3.5%, trading at new highs yet again. What did you make of the numbers that have come out till now? SBI Life, of course, today or tomorrow. And what's the pecking order within this insurance space?
If you ask in terms of the efficiency of performance, obviously HDFC Life, then followed by ICICI Ventures. There is no doubt. I don't think POC insurance companies can match the kind of performance HDFC Life shows year after year. But however, it is in price. If you look at the valuation multiple, which are quite high for both HDFC and ICICI Life. So rather than chasing these two stocks, I would put my money in GIC Insurance. It has come out with the extraordinary results in December. I am expecting once again a very impressive performance in the March quarter. So that would be my choice within the insurance space.
Okay, Mr. Chokkalingam, talking about the earnings today, we had Yes Bank's numbers coming out a while back, and the stock's also trading almost at day's high. It's your top gainer on Nifty, trading with gains of over 5%. Clear improvement seen with regard to asset quality sequentially, marginal beat when it came to the NI growth as well as the bottom line. What did you make of the numbers at 342? Would you recommend buying the stock?
No, frankly speaking, I am not able to digest the kind of growth the business they have posted. Credit growth of more than 50% is unbelievable. It is extraordinary, no doubt, because the industry itself is growing at 10%. Even a bank like HDFC and all, they are growing in 25 to 30%, whereas this has posted over 50% growth. If this bank can post even 30% credit growth on a larger base from now onwards, then it would be a great buy. But I need to understand what made the big difference. But otherwise, I would suggest only for the very long-term investors to buy. But if you can get the confidence about the continuation of such a robust credit growth, then one can buy in the short term also.
Okay, that's the view coming in on Yes Bank. Just want to mark few stocks before we get in. Sarvendra, Butterfly, Gandhimati Appliances. That's locked in upper circuit. It's trading with gains of nearly 10%. And I guess stocks like Shakti Pumps as well as Hathway, which we're seeing some bit of correction in the past few trading sessions, have bounced back today. Shakti Pumps is in fact trading almost at day's high with gains of 10%. Hathway cables have come off a bit from day's high, but still holding on with those gains of nearly 5%. Okay, I think we have Sarvendra with us. Sarvendra Srivastav, independent market expert, who is joining us. Hi, Sarvendra. Good afternoon. What's the view on Nifty at these levels? Are you taking any position on Nifty or Bank Nifty right now? Or are you waiting it out?
Yeah, very good afternoon. No, I think on the Nifty, if you look at, I think the key parameter to now look at would be the INR, and the way INR is placed right now, close to 67 levels. I think Nifty definitely can show some weakness. Even when you look at the WTI crude, I think there are also targets up pending. So I think these two things clubbed in together, a weak rupee and a rising crude, I think is a recipe where Nifty could correct from here. And as it is, we have pulled back close to 60% of the entire decline that we had from 11,100 odd till 9,900. So a 60% pullback is already done. So my sense would be that going forward, as long as you don't go past 10,700 decisively, Nifty could slip back towards 10,400. So I would say that at around 10,600 thereabouts, I would initiate a sell and look for a target of 10,400 on the downside, and keeping a stop loss at 10,716, 717.10 on an hourly closing basis.
Wow, did I hear Sarvendra correct? 10,400 instead of 9,700. That's good news. Sarvendra, what about specific stocks? What are you recommending today?
Mix, essentially a buy, a solitary buy, and two sells. The buy being from the pharma space, which is Ajanta Pharma. I think clearly the stock is finding support around 1360, 1370. So a buy here for a target around 1400, keeping a stop loss at 1354.40. That's the solitary buy, and the remaining two are on the sell side. The first wing, a sell on Dalmia Bharat for a target of 2900 on the downside, keeping a stop loss at 2981.10, and a sell on Gale also. I think that stock also looks weak for a target of around 310, keeping a stop loss at 330.10.
Okay, some interesting names there. I was looking at stocks which are at new highs. Cyient and NIIT Tech continues to rise and shine. NIIT Tech, I think, was at 970 day before yesterday at 1123. Cyient at 761, packing serious punch, had new highs as well. I don't think Mindtree is amongst the list of the top. It is, sorry, excuse me, I stand corrected. 1050, which means Mindtree too is trading at new highs for itself. Mohit, these two or three mid-cap IT firms, NIIT Tech in particular, but even a Mindtree or a Cyient or some of the others, what looks best on the charts?
Well, NIIT Tech does look the best compared to the other two, but the other two also look really good in the charts. They're still in very strong uptrends. Would I recommend fresh buys? Perhaps not the best time from a trade point of view, because they have run up already. You'd want to wait for a consolidation sideways or slightly downward or time-wise and then get in. Because if you get to enter at these levels, you can very easily see maybe a 5-7% downside, which is corrective in nature, and then you continue to move higher and make, again, fresh all-time highs. So from a trade point of view, not the best entry points, but if one is holding, continue holding, no point selling it, just keep holding, and you will see higher levels because it's sectoral tailwind that's come through.
So you mean higher levels for all the three possible?
Yeah, absolutely. Higher levels for all three. I mean, NIIT Tech could pretty easily see levels of 1200 in the coming few weeks. As far as Cyan goes, this also is looking good in the charts. And though there's some bit of selling at 775, you could see some consolidation and then move higher towards 800, 820 zones. So both of them looking good in the charts. Thirdly, you spoke about Mindtree. This also looking good, and 1100, 1125 next on the cards here.
Okay, just pull up SRF. Remember, that's also in the futures and options market. I think it is trading around its day's high mark, and it's somewhere about 2273 right now. If I'm not mistaken, it's also the 52-week high for this counter. Mr. Chokkalingam, any view on SRF at these levels?
No, certainly not. I used to recommend the stock when it was less than 300. No, I follow value investing. Maybe my suggestion will not be useful for traders and short-term investors. I would look for tomorrow's multi-bagger rather than today's the multi-bagger. I mean, the stock which have already become multi-bagger, I would not chase.
You do have a pick in the chemical space, if I'm not mistaken.
I like JB Chemical. We have personally also invested. I picked up this stock today because yesterday the management was able to get back normal status for Daman plant. Last week, that plant got closure order from the Pollution Control Board, but that order got revoked, and they have recommissioned the plant, which is a big positive news. Otherwise, also the stock is amazing wealth creating idea in the next 1 to 2 years, because it has got a strong balance sheet, lot of cash on the book. It's one of the best working capital management. If you look at receivable and inventory, which is about 33% of sales, whereas companies like Aurobindo Pharma on standalone basis, inventory and receivable at around 75%. And then again, this dependence on US market is very small. It is less than around 17-18% of the total sales. And the last 2-3 years, it has expanded heavily the network of representatives for the prescription business. And it is set for solid growth. And in terms of valuation, it is trading at around 12 P on 1 year forward earning. If you look at enterprise value to sales also, it is just 1.6 times. Many mid-sized pharma companies are trading at even 3 to 4 times. So therefore, I believe that this will be a solid creating idea in the next 1 to 2 years.
Okay, in moments from now, we'll have the Yes Bank management addressing the media, but look at that stock. It's up 7% now, 347 and counting. This is a big move and a big reaction to the numbers. It's trending higher and it's now trading at the highest point of the day. It went up post the results, and then there was some serious buying. I'm sure the volumes on the cash market would have picked up today. 40 million shares, yes, but the AVAT on Yes Bank will show you. I'm 99% certain that the volumes today will be higher than what the average volumes typically would be on Yes Bank. 7%, 22 or 23 rupees higher in the session today, 348 and counting. I just get the volume picture there on your screen. Post the results, a substantial jump up in volumes today for Yes Bank. First, a trade view out here. Mohit, Gaba, 7% already. For somebody who bought into the stock after the results were announced, thinking the numbers were very good and wanted to trade, he's sitting pretty on a 3.5% gain intraday. Would you recommend booking profits, or do you believe the charts indicate that there could be more in store?
Well, given the ferocity of the up move, it looks pretty strong, and it could certainly move higher. However, previous price action says that there is a bit of resistance around the 360, not resistance, but supply zones around levels of 360 to 370 zones. They are like strong supply areas. So you could see some profit booking in this area, but given how good the fundamental news is that you'd know better, if we do get past levels of 370 on the upside, then we're looking at it trading at close to all-time highs, and then you could even get levels of 400 to even 425 next in the next few months. So far right now, from a short-term trade point of view, not the best entry point, but if you're looking to buy it positionally for the next month or two, then yeah, still a good buy.
Interesting. I think a lot of people wouldn't have been so overweight on it, Yes Bank, or even for that matter Axis, going into the results, which is why the stock was absolutely flat. It had gained day before yesterday, by the way, or in today's session.
It's gained, I think, throughout the week. Yeah. So Yes Bank was the only lone outperformer.
Yeah. So day before yesterday, for sure. I didn't know about yesterday though, but I don't remember yesterday's move.
On Monday, Tuesday, it had gains between 2 to 3%. Yesterday was quite flattish. I think it was up only 0.5% or 1%.
Yeah, and today's session too, absolutely flat. But then the asset quality surprise coming in. Mr. Chokkalingam, did you look at the numbers of Yes Bank, and does it give you confidence to make a fresh investment into it at the valuations that it is trading at?
Maybe, I would wait for a day or two, because this is an immediate reaction to the very good results. Yes, I looked at the numbers as I mentioned earlier also. Unbelievable growth in the business, which is very difficult to understand. More than 50% credit growth when the industry is growing at around 10-11%. And also it got one of the best asset quality, no doubt. But I would wait for this initial euphoria to die down before entering the stock.
Okay, that's the fundamental view coming in on Yes Bank. The markets are still trading around those levels of 10,580, 24,925 for Bank Nifty. But let's get you the chart of the day, and we shift focus to the state financiers today that have been trading at over 1 year low if you look at the valuations. Let's head across to Yatin Moda to find out what has he analyzed today. Yatin, over to you.
Thanks for that, Navneet. And we are talking about state power financiers, REC and PFC. So we have Rural Electrification Corporation, which is basically the white line, and the blue line indicates the historical price to book valuation on a 1 year forward basis, which Power Finance traded at. So if you look at a period, starting somewhere around September of 2006, it has gone below that level. So if you look at Rural Electrification Corporation, that is trading at a forward price to book valuation of 6.4 times, and Power Finance Corporation trading at almost 0.5 times price to book on a forward basis. And despite those attractive valuations, there has been a continuous slide. In fact, if you look at the June 2017 highs, wherein both of these companies were near about 1 time price to book, it has almost corrected nearly 50% from there. In fact, if you look at the analyst community also, they are expecting a 25 to 50% return potential for Rural Electrification Corporation and Power Finance Corporation respectively. And remember, this price to book value, despite the fact that analyst community has been bullish, is not working in favor of both of these companies. Probably the market is factoring in some bit of pain in the asset quality moving forward in the power sector, and hence a slight bit of pain coming in for both REC and PFC in terms of the valuation at which they are trading at.
Interesting, Yatin. Thanks for putting that into perspective. That's an interesting chart as well. Mr. Chokkalingam, typically we've seen a lot of people trying to play PFC, REC on the dividend yield theory. If they've gone down up to a particular level on the dividend yield, they become naturally attractive irrespective of the hole that they may be in. Just that the things, I mean, we spoke to the REC management. He did seem bullish, but believe that it'll be a long road to recovery. Would you go out and make fresh investments here, or are there better opportunities available?
Not really. I won't buy them now, because if you look at the user industry, which is the power sector, that industry is in trouble. You have wind energy power tariff crashing, solar power tariff crashing, and accordingly the thermal power tariff is also getting adjusted on downside. So that is a source of ultimate revenue for the entire sector. So when at the end user level, when the revenues are going down, realizations are going down, the pain is going to get transformed across all the sub-verticals of the power sector. And for these two companies, I am sure the pain in terms of NPA would increase. So therefore, I have strong doubt whether they will be able to maintain the kind of dividend they gave in the past. So therefore, I would better wait for the March results. Then even if I have to pay 5% premium, I won't mind paying. But before that, I would like to assess the asset quality and capability to maintain the dividend.
All right, Mr. Chokkalingam, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the markets and also giving us your top pick in the form of JB Chemicals. Just want to pull up IDFC Limited. It's been very strong since the morning session. Just want to alert our viewers. I guess the earnings come out tomorrow for this one. And also, there were some newspaper reports indicating that the company is looking to sell its AMC and broking business. Sarvendra, quickly on the charts around this level of 55, 56, does it warrant any sort of buying?
I think within this pullback, the stock has run up and now come all the way till its long-term 200-day average. So the long-term 200-day average is where it is today, right now, around 56 quarters. So I think if someone has not, for a fresh trade, if someone has not taken a trade, I would say that wait for a break past 57 and then probably a fresh trade emerges here. Anybody who's already in the trade, then probably you can hold with a stop loss below 52. So a stop loss below 52 and hold for those who are holding it already, and a breakout at 57 probably will give people a chance once more probably to enter the stock. And if you're entering a breakout of 57, then at that level also your stop loss would be close to 52 levels, and you would be looking in for a target of around 64, 65 on the upside.
Okay, so hold on to IDFC Limited. That's the call coming in from Sarvendra. Well, on that note, we will slip into a very short break here and count down. But on the other side, don't go anywhere. We'll get you some top trading picks and also from our top recommendations coming in from the dealing room. Stay tuned.
I would say that, from a 12-month perspective, or even, from the rest of the 2018 calendar year perspective, I think, we should probably be expecting only a single-digit return from the market. So keeping that in mind and keeping where the bond yields are, many of the sort of AAA corporate bond, are offering 8.5%, 9%, even more than that, kind of yield. So at this point in time, I would say that the risk reward seems to be unfavorable for the equity markets. I would be, happier investing, in the debt market as of now.
Clearly, one must understand that rural market, the pattern of cash flow is not a monthly fixed cash flow pattern. They're all earn and pay customers. The farmers sometimes earn, sometimes their cash flow gets delayed. So 90 days is a very normal norm in as far as rural is concerned. But we are bound by the regulatory requirement of provision on a 90-day basis. So even on a 90-day basis, from 11.6, we have come to 8.5%. And we do see that if these cash flows hold up, both infra and farm cash flow hold up, as I said, the trend of reduction will continue for the next couple of years as we see that market very, very positive at this stage.
I think we've always, our focus has been the non-metro towns. If you were to look at the industry average of the B15, which is the smaller cities and towns, is 18%. For us, it is 22%. We continue to see very, very healthy inflows from small cities and towns. And as I mentioned earlier, the fact that we have seen the highest retail inflows coming in the last financial year and the post-demonetization, majority of the flows are coming from smaller cities and towns. The fact that we have opened 120 new branches, we are in 280 locations, and some of the branches we are the only mutual fund present, you will clearly see us gaining disproportionately in these markets.
Fortunately, our gross margins are very good and our EBITDA margins even better. So we are not desperate to pass on all the price increases. But yes, if you look at the current price of light liquid paraffin, which is at around 74 rupees a kg, we have factored that into the price increases. What we've actually done is we have taken the price hike on our larger size SKUs, and on the smaller size SKUs we've actually taken a drop in the volume. For example, our smaller sizes 53 ml and 105 ml, we've actually reduced it back to 50 ml, 100 ml, and not actually taken a MRP increase. Whereas in the larger sizes, we've taken a price MRP increase. Equated across Bajaj Almond Drops, it would be approximately 3 to 4% increase in prices. So hopefully you will not see a major impact. Maybe in terms of gross margin, you'd probably see a reduction of 50 to 100 bits.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
What if lucky discoveries could be discovered without luck? What if the secret code to investing was no longer secret? Could the complexities of business not be so complex anymore? Decode, demystify, learn. BQ Learning. Only on Bloomberg Quint.
Minutes left for the markets to shut. In moments from now, we'll also have Rana Kapoor starting to speak to the media. And we have a few questions that have come in. Yash Mehrotra is asking about what's the view on KEC. He's bought it at 390 levels. He needs a view for the next 6 to 12 months. Jatin Agarwal is asking about recommendation levels for Reliance. And we have a question specifically for Mohit, asking about, please ask question, Mohit, a question on HDFC Life. So 2 or 3 queries that are there on social media for our guests. And we'll try and get all of them answered. But just before we do that, it's time to get into the Fab 4 stocks of the day. And Yash Upadhyay Johnson with what's made it to his list today. Good afternoon, Yash. What's made it to your list?
Good afternoon, Neeraj. So we kick things off with IDFC. Now this one has surged as much as 7% today. Its highest intraday move since over 6 months after ET reported that the company is in talks to sell its asset management business and broking unit. IndusInd Bank, Yes Bank, Bain Capital and Warburg Pincus are all amongst the suitors to acquire the company's mutual fund business for anywhere in the range of 4,500 crore rupees. Also, Yes Bank is in talks to acquire IDFC Securities for close to 2,000 crores. Shelly Engineering continues to garner more and more interest from fund houses and investors alike. The stock is up about 6%, following up on its big move yesterday after HDFC Mutual Fund bought close to 1 lakh shares, about 1.2% equity in the company via a big bulk deal yesterday. Now, Shah Alloys, some positive news coming in for this counter. It's locked in an upper circuit of 5% after the company said that it has entered into a settlement agreement with Asset Reconstruction Company India for the settlement of its outstanding credit facilities by March 2022. And finally, Hathway Cables is up 6% today. It had been under severe selling pressures over the last 4 trading sessions and is up about 6% or so thereabouts. Volumes too coming in at the higher end. Back to you.
Thanks a lot, Yash, for bringing those Fab 4 stocks of the day. And as he rightly put it, Hathway was under immense selling pressure in the last 3 to 4 sessions. And today, finally, there is some bit of bounce back that has been seen for that counter. In fact, the sugar pack is also once again reeling under pressure. So something like Mavana Sugar, Dhampur Sugar, all of them have seen some sharper cuts. And DCM Shriram reacted to its earnings yesterday, which came day before post-market. As remember, the stock was down 13 to 14% yesterday. Today as well, it's seen a correction of further 13 to 13.5%. But let's go across to Mayuresh Joshi, fund manager at Angel Broking, who joins us on the show now. Hi, Mayuresh. Good afternoon. Thanks a lot for joining us today. Mayuresh, Yes Bank's management will be addressing the media anytime now. Just wanted your thoughts because the stock has gone up. The numbers are optically looking pretty good. What have you made of them?
No, very strong set of numbers, Navneet, and large element in terms of asset quality actually improving quarter on quarter was a very surprising element. The other element in terms of strong loan growth in excess of 50% and profitability and NII growth exceeding our expectations. I think the numbers were again far better than what I had anticipated. The second element, obviously, that's going to be very critical is going to be the divergence that they probably reported. And though I think the circular or the statement probably states that a large element in terms of upgrades that have probably happened, one account probably moving to standard, one account being sold to the ARC. I think one really needs to understand the entire mechanism surrounding the divergence numbers. The third element, obviously, the capital raising and what they're probably going to do with this raised amount and at what periodicity of time is going to be equally critical in terms of the strong earnings momentum that the bank has exhibited. So credit costs, again, at manageable levels and a large element in terms of the outlook for the bank as per our expectations very much looks on track. So I think good set of numbers. This is one stock that I've liked, continue liking that, and clear disclaimer, we hold this stock in our funds.
7% higher. It's really done very, very well. Mayuresh, just before we move any further, to address some queries out here, we'll do a bit of a rapid fire here. Mohit, since the question came in, one of the questions came in for you, quick 2 or 3 questions. One is on HDFC Life, what do you do there? And one is on Reliance. Jatin Agarwal wants the recommendation levels.
Well, as far as HDFC Life goes, it's in a very strong uptrend, and this can continue to move higher. It's at all-time highs, so next levels could be levels of 570, maybe even 600 in the coming few months. If you're a long-term investor, continue holding. You need to have a deep stop around the levels of 495 for HDFC Life, so continue holding. As far as Reliance goes, this also seen a pretty strong up move the last few days, so this also can continue to move higher in the coming few days towards levels of 1020 next. Still looks good in the chart, so it's also a buy or continue hold. One stock, KEC, I think you spoke about as well. This has seen a bit of a correction, and we're trading pretty close to support areas of around 380, 390 zones. We're trading at 400, so it's a range-bound stock between 440 and 380 on the downside. I think it's a buy towards levels of 380, and you can kind of sell it towards levels of 430 on the up.
Okay, so those are the views. Let's go across to Rana Kapoor.
Participation this afternoon at Yes Bank's fourth quarter fiscal 2018 results, as well as results for the full year ended fiscal 17 and 18. I'm very, very pleased to share with you that this quarter and this year ending has been a year of significant milestones in our life cycle, which is almost closing into 14 years. This is the first time that the bank's total balance sheet has crossed 3 lakh crores in total assets. The first time our total deposits have crossed 2 lakh crores, and is also the first time our total loans, as in advances, have also crossed 2 lakh crores. And there is one very important adjacent development, and you will recall roughly about 3 odd years ago, we were the first bank to commence business, international business in Gandhinagar at the International Banking Unit in Gift City, roughly about 3.5 years ago. I'm very pleased to report to you that that unit has also crossed $2.5 billion in total assets. Actually, it stands at $2.8 billion. So this year, fiscal ended 18 has been quite a record in many, many ways, and is a stepping stone towards Yes Bank now evolving as a meaningful large bank, a large home country bank in our country, India. I do want to mention that the growth has come not only from our corporate businesses, but there has been very meaningful contribution by MSME businesses, by retail, and I will dwell on the numbers in a short while. I also wish to emphasize that in the overall scheme of things, that bases the growth in a fairly challenging year with a lot of tailwinds now accreting, but there were headwinds in the former part of the year. The bank is of the view that we can continue with sustained growth, at least for the next 2 years, when we complete the first phase of our large bank phase. Our asset quality, which, as you know, for more than a year plus has been top of the mind in the banking system, has demonstrated significant improvement. It's amongst best in class, I think, in the top 3 of all private and public sector banks included. Our gross NPA has improved sequentially from 1.72% to 1.28%, and net NPA has improved to 0.64% from 0.93% sequentially. Credit costs for the year has been contained at 76 basis points against some market forecasts that were expecting this to be north of 100 basis points. I'm very, very happy with this outcome and delighted to share that in a very, very challenging year, we have been able to contain this and not compromise whatsoever in our P&L as well as balance sheet growth outcomes. The bank continues to be in a leadership position in the digital space. We have been ranked number 2 across all public, all private, all payments and foreign banks by the Ministry of Electronics and Information Technology for the year ended March 2018. And this is also a reflection of our strategy, which is being implemented on war footing to become more and more of a technology company in the primary business of banking. And that's something that we are pushing as part of our Future Now strategy. I now want to dwell on some numbers in more detail. Net profit for this quarter went up 29% to an overall of 1,179 crores. And for the year as a whole, it was up by 26.9% to an aggregate of 4,224.6 crores. So definitely a record year for our still very young bank. Net interest income for the quarter grew by 31.4%, and for the year as a whole grew by 33.5% to a level of 7,737 crores for the fiscal year ended March 18. NIMs stood at 3.4% for the quarter, but for the year as a whole, they were at 3.5, a slight improvement over fiscal 17 from 3.4 to 3.5%. Non-interest income for the quarter sequentially, year on year rather, grew by about 13% to 1,421 crores, and for the year as a whole stood at 5,223 crores.
Well, that's of course Rana Kapoor addressing the media on their numbers and the fundraise as well. Is the stock up 8%? I think the stock is up 8%. It's a big move out there for Yes Bank and counting, and how it's just doing remarkably well in the session today. Mayuresh, I know you spoke about having Yes Bank in your portfolio. The question mark is, would you buy it afresh?
On declines, yes, Neeraj, because the inclination here is that the loan growth will continue on a very strong footing. The second element in terms of the numbers that they've reported, specifically in terms of asset quality, I think it's a very encouraging trend and sign. And again, I think a lot of the management transcripts that I was reading through, I think the impact, both in terms of the new regulatory circular that RBI has posted, along with the leverage that they probably do in terms of the assets that they lend to on the corporate side, these assets are either backed by collateral or they are backed with very, very strong cash flows. And the third element obviously is the NIMs, which are expected to probably stay in a range. And again, the book value. So the adjusted book value, even if I count that to be around 160, 161 odd rupees for FY20, I think it's not overly expensive at this point of time. So any decline, in my opinion, yes, would become a good buying opportunity for long-term investors.
Okay, that's the view coming in on Yes Bank. Just want to highlight the markets. We're almost at day's high, 622 for Nifty, 53 points higher as we speak. And Bank Nifty has also gained momentum. That's trading with gains of almost 200 points. I think the heavyweights like TCS, they've inched higher. Also something like ITC, another heavyweight on the index, and HUL, all of them seems to be trading around the day's high mark. ITC is at 1.5% higher, HUL trading with gains of over 2%. Sarvendra, before we thank you, since there's been a sharp U-turn in the markets in last 10 or 15 minutes of trade, any strategy or any individual stock that's popping up on your screen?
No, I think with the Nifty, I think today being expiry, this 30-40 point pop which we've got, that's usual and normal. I think what we wait out and see as to how we close the week, that should be the more crucial thing going forward. And we have 10,600, 10,650 as a resistance area for Nifty in the short term. So we need to decisively cross this if more strength has to come into the Nifty, because as it is, this pullback I think is far better than what I had initially expected. So 10,300, 10,350 was max that we are looking at. So definitely the nature of this bounce tells you that yes, the bounce has been deep. So next time the correction comes in, the nature of the market would be a slight buy on decline, if at all. So, but for the time being, I think 10,650, 10,700 will be post expiry will be a hurdle, and you would get a 100, 200 point correction before anything on the upside meaningful resumes. So I would stick with this and into this bounce probably with a stop at 10,717 on our hourly closing basis. I would still initiate some shorts on the Nifty, purely on the Nifty.
Okay, sir, thanks a lot for joining us today and taking us through your technical views on the markets. Let's address those SBI Live's Q4 numbers, which are flashing there on your screen. 381 crore is the net profit for the quarter versus 336 crore. Well, the net premium income for the quarter has come in at about 9236 crore versus 7346, which was seen in the corresponding quarter. And we've seen the stock recovering. It did have a gap down in the first half of the trading session, but some bit of recovery was seen. Remember when the ICICI Prudential numbers had come, SBI Life too went up with that. Mayuresh, any thoughts on SBI Life's numbers? We've seen a good run up in both ICICI and SBI in the last few trading sessions.
No, very decent set of numbers. And again, if I have to put a landscape over the next few quarters, I think numbers in terms of the new business premium are going to probably increase at a fast clip. The second element in terms of the new business premium margins actually holding up and improving over the next few quarters is a possibility. And the third possible angle that we're probably looking at is a well-diversified product basket. So whether you're talking about the non-participating products, which account for 25-26% ULIPs around that 55-60% mark going ahead over the next few quarters, and the non-participating as well. So again, I think participating, non-participating ULIPs, I think it's a healthy product basket and a well-diversified one at that one. And all the key parameters probably for all these companies are holding up. So whether you talk about the persistency ratios, solvency ratios, they're all looking good. So I think the businesses have matured. As they start contributing meaningfully in terms of new premiums flowing through because of the huge potential that the businesses have, the return on embedded value should improve gradually. So yes, I think maintain a positive view on the sector and the stock as well.
You know, I don't have the Q4 persistency ratio, 61-month persistency ratio, but for the year that they've given
49.64.
Okay, for the year it's 58, but for the quarter is 49. 61-month persistency ratio.
Yes.
So both for HDFC Life and SBI Life, it's sub 50. For ICICI, it actually went up from 53 to 54. So the 61-month persistency ratio at the end of Q4 or for Q4 was very good. But for the year, you look at this one for the year. For the year, SBI Life at 58, clearly head and shoulders above the others. I think the other two at around 54 and 51 respectively. So this one is certainly holding out well. FI70 was 67% though, keep that at the back of your mind.
There's been a sequential increase and even on year-on-year basis with regard to persistency ratio for 61 months. So for March quarter it's 49.6. I think in the previous quarter they've given it was 44.5%.
But that was Q3, right?
Yeah, that was Q3.
But so on a YOY basis, because
YOY in the corresponding quarter of last year it was 42%.
But for the FY17 as a whole, the number was 68%. It's come down to 59% or 58%. And it's just SBI Life lying flat. But it's actually about the Nifty right now, isn't it? As we come to a close, and let's get in closing strategies. Mohit, first a thought on the index. Sensex up about 0.6%, the Nifty Bank up 0.9%. Would you carry home trades? I mean, this is a different kind of expiry. It's volatile for all the right reasons.
Well, yeah, it still looks like it looks okay as long as we trade above 10,550. I remember I said it was you have to have a positive bias. That is perhaps the line in the sand. And next levels here at 10,700. If you remember, I said Bank Nifty could perhaps very well catch up, and it's been the gross outperformer today in the last perhaps half an hour, and this could continue to move higher. For the Bank Nifty, we have to get past levels of 25,150. Once we are past those zones, then another 200-300 points open up on the upside. Also, maybe Yes Bank would set the tone for the private bank results, and that would perhaps rub off on all the other private banks, and you could see a move on the Bank Nifty, which would lead the index higher, like I said.
IndusInd Bank is revved up about 2% in trade, so good move there. Kotak Bank, which has done reasonably well this entire series, is up another 1.5%, and I would reckon at 1184, Kotak Bank would be trading at new highs for itself, so good going there. And Navneet was referring to SRF. I'm just moving a shade away from Nifty names. SRF is up 7%. That's trading at life highs and new highs for itself, of course, but life highs too. HDFC Life too continues to rise and shine and moving up, but the story, of course, is in the Nifty Bank. Mohit, before we talk about other specific things, one BTST or one STBT, one closing strategy essentially.
Well, like you said, Kotak Bank is looking really good on the charts, trading at all-time high levels of 1200 on the cards here. So you could buy this with a stop around levels of 1170, 1175, and even likewise IndusInd Bank. Both of them are actually looking very good in the charts. This could head higher towards 1920. Next, this is a buy with a stop around levels of 1875.
Infi too has inched higher, another heavyweight up 1.5%. Mayuresh, can't take my eyes off these IT players. NIT Tech up 6.5% after surging almost 10% yesterday. Mindtree is now up 4%. What should one do? Is it time to book profits here?
So largely, again, I think it's a question of time horizons. So if you are invested in these stocks over the past 1 or 2 quarters, I think the delta that can come, as I was time and again mentioning, is through the BFSI spends. And as their order books start burgeoning up, though you might have an element of wage costs in Q1, Q2 spread across, I think a large element in terms of reasonable execution with good order books and EBIT and EBITDA margins holding up, I think that is probably giving some amount of support in terms of the higher valuations and multiples that a few stocks are commanding at this point of time. So largely, again, I think with the currency depreciation that we've seen, that is an additional tailwind, and most key parameters like utilization levels remaining strong because of reasonable order books can hold good in terms of IT companies' earnings. Again, I think there were a host of stocks that we probably liked. All of these stocks have probably moved up significantly higher. But again, I think within the mid-cap universe, Cyient and Nucleus Software, I think these are the 2 stocks that we'll continue to like on declines.
Interesting. Mayuresh, any thoughts on SRF, if Navneet has not asked you already about it?
No, she hasn't. So again, I think the move, Neeraj, has been astounding. So if you look at their chemicals and polymers business, I think that business has done reasonably okay. And again, the expectations in the second half is largely that this business will improve, both in terms of the operating performance, reflecting positively on the EBIT margins. Again, I think the refrigeration business is something which is holding good for the company. And again, I think the kind of developments that we've probably seen, both in terms of domestic demand and the export demand as well, that holds good. I think on the packaging business front, I think there has been some amount of softness, which probably drags the overall operating performance for the company. But a large element in terms of these businesses coming together in the second half of the next fiscal, I think is something that the street is probably looking forward for. Now, if you look at valuations, obviously on the higher side, so I think SRF should justify strong earnings number to justify these valuations. If earnings disappoint in any count, on any count, either in the quarter to come, I think you might actually see some money being taken off the table. So I think valuations definitely remain on the higher side for SRF at this price.
Okay, valuation seems to be on the higher side. Just want to mark 2 stocks, IRB Infra and Shree Infra. I think both of them have perked up in today's session. IRB just about around the day's high mark, up 3.5%. Pull up Shree Infra as well. That's trading with gains of 3% at day's high. Mohit, any trade on any of these counters?
Shree Infra looks good. It's broken out of a nice base around levels of 85 zones, and we continue to move higher. Next levels here could be levels of 95, so this could be bought with a stop around levels of 90 for targets of 95. As far as IRB Infra goes, this has also seen an up move, but I'm not really comfortable with the chart. It's still broadly in a range, and I'd kind of wait for it to get past levels of 275, 280 before I'd want to go longer. So let's just hold out on IRB Infra.
Okay, just one set of stocks though. I think in the last half an hour, Den Networks has shot up in trade, and we all know Hathway was fairly active early morning trade itself, both of these stocks. But look at Den, that's a 10.5% uptick that we're seeing. I don't know if Hathway has had a similar move. No, it hasn't. Okay, maybe that one too has inched up a little bit, but it's Den Networks really in the last few minutes of trade. Big spike there. Carry home long positions?
I'd want to avoid Hathway. It's got a very sideways to negative chart structure. And as far as DEN Networks goes, this has seen a nice up move today in trade, and we're coming out of a strong base around levels of 90-95 zone. So yeah, perhaps we could get higher levels towards levels of 112, 114 next on the cards. If we get past those, then even 120, 125. So technically it does look okay. You can carry home long positions for higher levels tomorrow.
Mayuresh, dog of a stock, both of these very close to market close, but would you even touch them with a barge pole?
Not really, Neeraj. Not at this price.
Not at this price, no.
Okay. Just looking at a couple of other gainers in trade. Obviously, SBI is topping the list there, but clearly your other heavyweights, which I just highlighted, something like ITC, Infi, TCS, HUL, all seem to be around the day's high mark. And clearly, the April series has been good for markets. If you remember, February and March series, there was a sharp decline that was seen for both Nifty as well as Bank Nifty. So clearly a good respite in terms of April series, where we've seen gains for Nifty at least in that range of 450 to 500 points for that, and for Bank Nifty also, though it has been underperforming, but still we've seen some recovery coming in for Bank Nifty for the April series. Well, just few minutes to go for markets to close. Let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, a typical expiry day when you see a rally coming about in the last half an hour of trade.
Yeah, not bad. Yeah, I mean, nobody would have quite anticipated it. Maybe a couple of trading experts, Mohit, for example, was talking with the Bank Nifty. But yeah, good going, good close. I think the mid caps and the small caps wouldn't have rallied in the same vein. Such moves typically happen in large caps. But I must tell you, a clutch of mid cap, small cap names suddenly started perking up in the last few minutes of trade. The mid cap and the small cap indices should come up on your screen. A bit of a green on the screen compared to what they were trading at. So the market breadth may not have improved, but select stocks did really well for themselves. Let's look at what moved on the indices. The Nifty movers and the gainers and the losers will come up on your screen. Firstly, the gainers, Yes Bank standing tall, 10%. It just doesn't show any signs of bottoming out today, rather topping out today. Keeps on gaining. And then the next best stock is IndusInd Bank, which is 2.5%, so not too much. FMCGs come to the party all right this whole series and in today's session as well. So HUL and ITC doing rather well for themselves. And Infosys and Kotak Bank, Kotak trading at new highs for itself. What's not done well? The Bharti twins, Bharti Infra, Bharti Airtel. Lupin comes out here. Wipro, just about 2%. So it's actually not had a bad day considering how it started off. It's recovered a little bit of lost ground, but not too many losers worth talking about really. Axis Bank, out of its numbers, is down. I don't know if some short positions on that one would have been cut to after Yes Bank numbers, because if Yes can do what it's done, if Axis delivers even a mild bit of a surprise, you're looking at a gap up tomorrow. So I presume that some bit of shorts out there, if at all, if any, would also have been cut. But this is just my presumption. Navneet, what about the mid-cap end of the market?
Well, the broader markets, Neeraj, definitely underperform if I compare it to the benchmarks, but benchmarks did go up on back of the expiry day. Let me take you through a couple of gainers first. Butterfly Gandhimati, that had a very good session today. In fact, the stock was locked in upper circuit with gains of 10%. The other one was Shakti Pumps. The stock was down nearly 6 to 7% in yesterday's trade, and today it bounced back, closing around the day's high mark with gains of almost 10% coming about. SRF, which is also in the futures and options market, we did see some bit of long positions coming about. The stock also touched its lifetime high levels, 6.5% up for SRF. IDFC Limited, that was the other one which went up, obviously first on back of the newspaper report suggesting they're looking to sell their broking and AMC arm, but the numbers will also come out tomorrow, so watch out for this counter. IDFC was up nearly 6%, and clearly NIT Tech, I'll call it the stock of the week. It's been going up every day, registering fresh highs almost every single day, and look at that. I remember yesterday also the stock closed at day's high. Today also it's closing at day's high with gains of nearly 7.5%. On the losing side, something like DCM Shriram, which has reacted negatively to its earnings yesterday, it was down 15%. Once again today, the stock came under selling pressure, down almost 11%. Anil Ambani Group companies, Reliance Naval, this will be coming out of the F&O from June series, that was down nearly 15%. Reliance Communications, second straight day of selling pressure seen for this one. Idea, which comes out with its numbers this week, registered its fresh 52-week low, in fact closing almost at day's low mark with cuts of 4.5%, and the sugar pack continues to reel under pressure. Pick up any stock from this pack, and we've seen selling pressure coming about. Something like Mavana Sugar was down nearly 8%, Neeraj.
Wow, that's interesting. Balrampur at 65 or 64. What a cycle it had, from 40 all the way to 170 and now back to 66 odd. But this is how the markets are looking at close. A pretty picture if you are a bull, not so if you were having some shorts, especially in the Nifty Bank. I think that's the chart that is worth looking. Some big spikes in the second half of trade, courtesy Yes Bank, and what a brilliant move. Yes Bank had it. I think it just lifted the sentiment on the Nifty Bank by and large as well. So Yes Bank up 8% and Nifty Bank, it lifted the sentiment out there. Bring up the contributors list. You will see Yes, maybe you will see HUL or ITC, either of those. Not maybe HUL, but ITC certainly out there. And then TCS and Infosys packing some punch. But Yes Bank, it's not a heavyweight, but just the virtue of the move, Navneet, that 12 points out there. Not too many losers worth noting, really. L&T every now and then here, but nothing that I mean, nothing dramatically that stood out in terms of the Nifty losers at least.
That's right. I think Bharti Airtel, somebody would have thought after yesterday's announcement, the run would have started on the upside. But I think that also gave up its gain. Not only Bharti Airtel, even Infratel was down in today's trading session. Yeah,
the market breadth and then the volumes. Volumes naturally would be high, but the advanced decline ratio, see, that didn't improve too much. Me and Navneet were talking about it. Hardly any gains there. But the volumes would be higher. Maybe 12-13 lakh crores on the NSE FNO. That will come up on your screen. I'm interested in looking at the BSE cash volumes as well after the 3 digits yesterday. Wow.
14 lakh crore. Neeraj, there was a mistake with regard to BSE turnover. I checked on the website. It was actually somewhere about 24-25
okay.
crore.
So it's par for the course.
It's par for the course. And for NSE FNO, it's not the all-time high, but on an expiry day, you would definitely see turnover between that range of 14 to 15 lakh crore. Oh, but look at NSE cash. I think that's crossed the 40,000 mark after a lot of trading session. Last few days, it was only between 27,000 to 32,000 crore.
I'm very interested to look at the delivery volumes today in some of these private banking stocks and then see. Until now, IndusInd Bank, HDFC Bank, and now Yes Bank.
Yes Bank.
It's not been a bad quarter for private banks.
Not at all, but all eyes are on Axis and ICICI Bank.
Completely agree, Navneet. But I mean, so you would expect that HDFC and IndusInd Bank would do what they did. But for Yes Bank also to come out and do what they've done today on the asset quality front.
That's right. It's a beat on a lot of parameters, actually, what we've seen.
So it's interesting in looking at what the delivery volumes today are. And now, tomorrow becomes a really interesting day because we'll have Axis results to react to as well. And this is what? This is the expiry.
The performance of the April series. So individual stocks, look at TCS. And clearly it's been all about the ID stocks. So TCS gained nearly 23% for the April series. Yes Bank, owing to today's gain, 17% higher. And it's also something like Mahindra and Mahindra. Kotak also features in that list. We've been talking about consumption space near it so much. HUL has picked up momentum. That's trading around its lifetime high levels. HCL Technologies, another IT stock. But on the losing side, it's all about the oil marketing companies. And I'm not surprised because whenever we pull up any index, these stocks feature HPCL, BPCL, both of them tumbled between 9 to 10%, whereas Axis Bank, I think this is going to be in focus for tomorrow's session for sure after numbers come out today, and also ICICI Bank being the heavyweight, it was just about flattish for the April series.
Yeah, the Nifty Bank hasn't contributed this series for sure. It has essentially been IT and to an extent FMCG. So ITC doesn't feature here in the list of the top performers, but it's probably right out here, 12th or the 13th best performing stock. Really did well in this expiry. Okay, that's the final picture. Let's get in final thoughts from our experts. Mayuresh, spoken about banks enough. HUL, ITC just seem to be charting a new course for themselves in this calendar. What do you do here?
So as a basket, and within this basket, the FMCG basket looks very interestingly poised, Neeraj. A large element in terms of FMCG's the HUL's FMCG business, whether you talk about personal care, personal products, whether you're talking about their soaps business, the toothpaste business, I think the volume growth should be quite reasonable. And as monsoons are expected to be near the long period averages, I think the second half is somewhere where all these spending patterns would start emerging, which means that the volume-based pricing that a lot of these FMCG companies derive from the rural markets should start showing up in terms of reported numbers for Q3 and Q4. So the second half should be exceptionally good for these companies. One might very well argue for a company like HUL, I think the valuations are on the higher side. but that's always been the case. So again, I think it's a clear hold from my side. We do hold this stock in our portfolio as well. And for ITC, again, I think though the cigarette business still rules the EBIT on a consolidated basis, I think the other businesses with their capital intensity that the management has put in and expected to put in, I think some numbers will start showing up. So for their hotels business, for example, I think few key parameters like utilizations improving for the sector as a whole is a very positive sign for their ARRs improving over the next few quarters. The agri trading business should also do reasonably well, and if monsoons are better, I think the other FMCG business, like in the case of HUL, I think the volume growth should be backed by price. So valuations remain extremely attractive, but the stock might probably stay in a range for the next quarter or two. But again, I think it's a very good long-term appealing and a compelling buy if one really looks at this space.
Thanks, Mayuresh, for joining us today and taking us through your views on the markets.
So
all right, let's get some closing thoughts going from Mohit, Gaba. Mohit, tomorrow being the first day of the new series, and obviously we'll have a lot of earnings also reacting from the likes of Axis Bank. What would be your approach and trade tomorrow?
Well, you know, I think that given today's close where the uptrend is still intact, we're still trading well above levels of 10,550, 560 zones, which is a pretty strong support area. So the bias has to be on the upside, and you would like to buy dips towards levels of 10,700, which is the next target on the Nifty. As far as the bank Nifty goes, this also can get higher towards levels of 25,150 to start with. If we do get past levels of 25,150, then it opens up a few hundred points more on the upside. So maybe, you know, if the bank, like Yes Bank's results today, if the private banks come out with a good set of numbers, this could perhaps lead the rally ahead because it's been a stark underperformer, and the Nifty could continue to move higher and trade in the next series.
Let's wait and watch. Mohit, Gaba believes that there is a possibility, of course there are always possibilities, that the Nifty Bank could well rev up the new series as well and maybe give some gains to the Nifty. Okay, Mohit, pleasure having you. Thank you so much for taking the time out and being with us, and look forward to having you more often on this forum.
Sure.
That's, well, view from Mohit Gaba, his thoughts on the markets and specific themes. With that, it's a wrap on this leg of Countdown. But up next, we wrap up the day's trading session on Bloomberg Quint's Market Wrap. Stay tuned.
Sir, please believe me, I am in this business for the last 12 years.